guys thought I forgot about the intro music, didn't you? Oh, no. Happy Friday, you magnificent melon heads. Welcome to my favorite time of the week, my Friday afternoon live stream where I get to talk to all of you fine people about the state of markets and finance and stocks and bonds and commodities and Bitcoin and you name it, whatever. Let's talk about it. And there is plenty to talk about today because everything is up. It's all up. Well, I guess that must mean all this bad juju's behind us, right? I guess that means the Fed has pulled off the soft landing. We just glided into the airport. Nice soft landing. We'd like to thank you for flying Federal Reserve Airlines, says Captain J. Powell. Everything's just fine. The debt problem is solved, right? All good things. Prosperity awaits us all. Congratulations, everyone. By the way, hi, Mom and Dad. Thanks, M&J, for reminding me. I love you guys. No, prosperity does not await everybody. What's going on right now, folks, is the dollar is weakening. We have got a falling Dixie. The dollar is a falling knife. And all these things that I'm talking about that are up in value, they are all denominated in dollars. And let's talk fractions. When the denominator gets smaller, the value goes up. The nominal value goes up. This is the dollar getting weaker of everything. And that's why in the same day, you've got stocks, bonds, commodities, and Bitcoin is all up in the same day. My God, this run in Bitcoin. I mean, yesterday, the Securities Exchange Commission freaking, what did they? They filed a lawsuit against Genesis and Gemini. They're being prosecuted for selling unregistered securities. And Genesis, owned by Digital Currency Group, the owner of the Grayscale Bitcoin Trust, that's a big deal, folks. 633,000 Bitcoin sitting in that Grayscale Bitcoin Trust. If Genesis goes down and they have to liquidate that trust, you better believe that's going to be a lot of selling pressure on Bitcoin. And Bitcoin bros are just like, no, pile in. And look, I like Bitcoin long term. I want to be clear about that. I'm not a Bitcoin basher. I believe in everything Bitcoin stands for. I know a lot of people are like, oh, it has no mass, it has no physical presence and no intrinsic value. I don't know what intrinsic value means, but I'm going to keep saying it anyway. I get that argument, and we've had that out in the comments. It's been mostly civil. Thank you for that. And it's a legit debate that I'm sure we'll continue having into eternity. But I still like Bitcoin. I think Bitcoin's going lower. I think it's going a lot lower. I think it should go a lot lower. There is so much cancerous rot in the world of cryptocurrency that needs to be carved out before we can move on to a healthier ecosystem. But even that is up today. So that's well, I guess that's it. That's the big thing. Let's say hello to Mish. Mish, the mod is in the house. How we doing today, Mish?
I'm doing great. So you were talking about soft landing. I just flew Southwest here about a week ago, and give them props. The pilot had a really good landing, and I went up to him afterwards because he had the door open. I said, hey, man, that was a really good landing. You know, that's the softest I've seen in a really long time. He goes, yeah, you know, clock's right twice a year.
Well, at least he picked you for one of them. That was good. So congratulations to Captain J. Powell of Southwest for sticking the landing on Mish's flight out to California. I don't think our landing from this money printing, inflation, whatever you want to call it, fiasco is going to be as soft. I really don't. I don't think there's any such thing as a soft landing. The Fed has never pulled off a soft landing in its history. They're not about to start now. But let's take a look through the indexes while we're here. We still got some time left in the trading day today. Right now, we started off down quite a bit this morning with all those bank earnings and all the banks setting aside billions or hundreds of millions of dollars for credit loss provisions, i.e. screaming, recession is coming. Markets don't care. Up we go. S&P up 9.5 points or 0.24%. It's not a huge day, but considering what came in with the bank earnings, I would call this one a big win for the bulls today. Dow is up 61.18% at 34,251. And the NASDAQ leading the way higher, up 47 points or 0.44%. Back over 11,000. I guess it's risk on today. Why not? Risk on, everybody. Just taking a look at the NASDAQ chart right now. We're still in this falling triangle pattern that we've been really this descending level of resistance is still intact. That goes all the way back to December of last year. And we've put in these consistent bottoms here also. Now we've bounced 1, 2, 3, 4 times off of that level. So we'll see if that holds. That is a bearish continuation pattern, but we're still a ways off of the resistance here. So this chart tells me the NASDAQ could go higher. It just recaptured the 50-day moving average and is moving up from there. So, hey, onward and upward. By the way, I am no longer short the NASDAQ. I got out of my NASDAQ. I had QQQ puts and some calls in SQQQ. I took some profits in those a few weeks ago, luckily, and I just got out of that position now. So it ends up being a break-even trade. Not my best moment, but at least I got out with my shirt on intact. Could have done better on that one, but we're moving on. Let's take a look at commodities right now, and looks like quite a bit of green in the commodity space. We've got gold is up 19.2260 for an ounce of gold, up 23, almost $24 today, or 1.25%. Silver is doing pretty well also at 24.43, up about 43 cents today, or 1.79%. Look at oil. Oil is still running 79.88. That's for WTI crude, up $1.49 or 1.9%. Natural gas, one of the few red ones today, at 347 for natural gas futures, down 22 cents or another 6%. Natural gas just cannot catch a break here, folks. And think about how far we have come in natural gas markets. Back in August, we were talking about this wintry snow apocalypse. Everybody in Europe was going to freeze to death, and the world was going to run out of energy. What happened? Did we build enough solar panels and enough windmills that we solved the problem? No. Nope. Mother Nature just made it warm. It's been warm for the first half of winter or the first month of winter. We got lucky. Don't congratulate yourself, European decision makers, policy makers, because congratulations, you bet your people's lives that it wouldn't get cold, and you won the first round. Congratulations. You must be very impressed with yourself. Good luck in the next round. I hope it stays that way. And a couple people were asking about natural gas early on today before the stream started in the comments. We are going to get to that one. We're going to talk about that quite a bit. But let's talk about the reason why this is happening. It is the Dixie, or the DXY, down again today, just a tick at 102.19. The DXY had a 101 handle for just a brief moment earlier today. It was at 101.99. Bounced above that, but still just down for the day. Down for the week substantially. We started the week at 103.75. Look at this thing on the yearly chart, though. We had that monster run in the dollar all last year. King dollar took everything down. And now look, really since October, we've just been going down, down, down. And I've been talking about this one a lot with my buddy Brian Zarb from the technicalchartist.com. And Brian, by the way, he took some time. We went for like an hour and a half last week looking through TradingView. He's taken the time to teach me TradingView. It's something I just never learned. I've been meaning to do. Brian took time out of his day to show me some things in TradingView. So you might see a few TradingView charts today. Thank you, Brian, for that, for the help on that one. Let's look at the bond market right now. Yields up almost across the board, except for that lonely 6-month Treasury. That one is down just a tick, but everything else is up. Looks like most of the gains are at the long end of the curve. The 10-year is at 3.5. That's up 6 basis points from this morning. 2-year at 4.23. Wow, the inversion just keeps getting worse. Just keeps getting worse. And, everybody, I saw this guy on CNBC today talking about how, the bank stocks are going to do so great this year. This guy from Wells Fargo, there's a name you can trust, Wells Fargo. It's not like they do anything untoward over at Wells Fargo. He was saying the bank stocks are going to rally 50% in 2023. I don't know. I don't know about you guys, but when I see more than 100 basis points of inversion in the yield curve, I don't think bank stocks are going to be ripping, because banks borrow short-term, lend long-term. Inverted yield curves, not so good for the banks historically. So, when you've got the FDIC is behind closed doors being recorded at meetings where they're not ever supposed to see the light of day, they're talking about bail-ins at U.S. banks and how if people knew about that, they would be terrified and that there would be bank runs. Oops, they were recording, somebody released it. Yeah, that happened. So we've got the FDIC is talking like that when they think nobody's looking. And then we've got this muckety-muck from Wells Fargo is going on CNBC saying bank stocks are going up 50% this year. You guys decide which one you want to believe. But right now, I'm leaning towards the bankers who don't realize they're being recorded. All right, that's a little bit more honesty for me. But in the short term, guys, I think it's time. We might have to retire this uptrend here. I talked about this one this morning. Check out the U.S. 10-year Treasury. We bounced off of this level a couple of times this year, but look what we got right here. We have got a major breakdown in the 10-year Treasury yield. We even retested it and failed the retest. So it looks like USTs, the yields are going lower, and that means the bond prices are going higher. A lot of this cash is going back into the market. I think this is people hiding on the long end of the curve. And look, we had our first negative inflation print yesterday. It was the month-over-month number was negative. It was down 0.1. Now, that might seem inconsequential to you guys, but if that were to continue, we're going to see year-over-year negative numbers in the not-too-distant future. We've still got a ways to go. There's still, 6.5% in the year-over-year numar.
So I think
But
it's
I got to
important
send a
here.
shout-out to Joe Brown. Joe Brown's been calling for deflation for a while now, and yesterday we had deflation. I hate to say it.
So, yeah,
ahead,
no,
Mitch.
well, I think it's important to discuss the difference between disinflation and deflation, right? Disinflation is basically easiest way is lowering inflation.
Prices still
Deflation is
going
when we
up.
actually go down below zero.
Right.
That is bad in our system.
So disinflation is still inflation. It's just less inflation. Prices going up slower. Right? Deflation, that's prices going down. Right? Now, these terms get used, disinflation and deflation get used interchangeably sometime. I usually just say something is deflationary. That means it's a force in the downward direction on inflation.
Now, in monetary theory, there is a deflation of M1 and M2, which is separate than what we're talking about. The deflation is what the Treasury is doing right now by selling bonds. They're deflating M1 and M2.
Well, let's talk about M2. I got that one queued up here, Mish, and I didn't even tell you about that one beforehand. But it is said of great minds often. Um, Look at this. This is the M2 money supply, right? And here we go. It peaked in March of 2022, right when the Fed actually did pivot from loosening to tightening. That was in March of 2022. And it's been an ever so gradual decline, but the M2 money supply has declined. It's now 21.35. It was 21.73. So that, depending on how you want to define inflation, some people define inflation as a general increase in pricing, and some people define inflation as an expansion of the money supply. And so deflation would be the opposite. Deflation would be prices coming down, or deflation could be the money supply contracting. Well, either way, right now, we're starting to see early indicators of deflation. We've got the money supply is contracting right now. And for the first time, we had a negative month over month. It's a small data point. A month over month is not a trend, but it is still a deflationary data point. So we are seeing the early indicators of deflation. Now, remember, everything that the Fed has done, all these interest rate hikes and all this quantitative tightening, these are deflationary forces, and these are lagging indicators, right? When the Fed does something, it takes months for that to work its way into the system. And the Fed has done a lot. They have raised rates and tightened the money supply faster than any point in history. There is no data point to go off of to say what happens when they do what they did all through 2022 and what they continue to do. They're still going to raise rates in February. They're probably going to raise 25 basis points or a quarter of 1% instead of 75 or 50, but that's still tightening. They're still doing it. So they're still making these things worse. So we could be in for a serious bout of deflation here. Now, we're going to go over some things with energy prices and things like that may be a little contrary to that. Markets are tough to read right now. Let's just put it that way, folks. There's a lot going on here. All right, let's go back to where we were in the bonds. And, well, let's talk about a couple of things. We've got a declining DXY, right? We talked about this. The dollar is getting weaker right now. Dollar getting weaker, that is upward pressure on asset prices. All right, that is not deflationary, a weaker dollar. We've also got interest rates dropping now. All right, here, let's retire some of these lines. Let's get rid of these, all right, because January 1st or January 3rd, whatever was the first trading day of the year, right? Here's what started. Boom. That started right around the first of the year. That's our new trend line, folks. That's our new baseline. It may adjust one way or another, but cues up right with the start of the year. So lower interest rates, weaker dollar, those two things, that is rocket fuel for gold prices. Congratulations to you stackers, because this is very good for gold. And the gold chart shows it. Told you guys we were going to see some trading view today. There we go. Here is the gold chart. Now, this one looks like it might be getting just a little bit overheated. Look at the RSI here right now, relative strength as a measure of momentum, all the way up at 73, 74. All right, so gold, it's overbought right now. People are piling into gold. All right, now if you scroll back and you look at the history of the RSI, it's only been at this level once or twice. So it could stay at this level for a little while and the price could keep rising, or we could see a little bit of a pullback. But all the forces right now for sending gold higher are still in play. So I think gold, maybe we're due for a pullback because the RSI is a little overheated. It's going to be short and shallow. I think gold is still going higher. We've got that beautiful golden cross right there where the 50-day moving average moved above the 200-day moving average. So as long as the Dixie keeps heading lower, as long as interest rates keep heading lower, gold is going to keep heading higher. Those are two very upward forces on the price of gold. And again, right now, looking at the Dixie, I don't think the Dixie is going to slow down until it gets to 100. So we've still got a few more percentage points to go in the price of gold. So keep an eye on the DXY. Keep an eye on that 100 level. And we're going to talk about a couple of things that might affect that in a little bit. Now let's talk about how long can this last? All right, how long can the dollar keep going down? Because there's a lot of things that are happening right now. Here, let's bring up the Dixie chart. All right, here's the DXY chart, right? Again, we're in trading view. Here's this big move up through 2022. All right, this big move down. Here's the death cross. Again, shout out to Brian Zarb. Brian called that one it was last week. Said, hey, Jack, check out the imminent death cross in the DXY. Sure enough, let's zoom in on that. There's the death cross, and a day later, 1, 2, 3 red candles in a row, followed by 2 more big red candles. So, death cross is a very bearish indicator, and it came true this time around. Dollar continuing to head lower. DXY right now, the RSI is getting pretty low. It's getting into oversold territory. It's getting down to a level where it's bounced a couple of times in the past. So it's probably got a little bit lower to go before it catches a bounce. Now, how big a bounce, and does that bounce carry forward, or is it a short bounce and we continue heading lower? I don't know. Nobody knows that. But the dollar probably going to catch a bounce right around 100 if I had to guess. Also, check out UUP. This is an ETF that tracks the U.S. dollar. The Invesco DB U.S. Dollar Index Fund. That one's about to make that death cross. 50-day moving average finally catching up with the Dixie chart. So this one's probably heading a little lower. But let's talk about the DXY and some of the things that could affect this. All right. What could affect the strength of the dollar? Well, the dollar is subject to supply and demand, just like anything else is. All right. So let's ignore demand for a second and let's talk about the supply of dollars. What is happening to the supply of dollars? Supply of dollars right now is shrinking. Here you go. M2 money supply. The supply of dollars is going down. It's going down faster than it's ever gone down. Even the last time the Fed did QT, the last time they were engaged in quantitative tightening, the supply of money kept going up because there was credit expansion. When banks make loans, money is created. All right. So right now, though, banks are not making loans. Mortgages aren't getting written. Refis aren't happening. People aren't taking out home equity loans anymore. Thank God. If you are, oh boy. So there's no credit expansion happening right now other than credit cards. Good luck with that. So the M2 money supply is going to keep contracting. Take a look at the Federal Reserve balance sheet. By the way, I had a lot of people, a lot of trolls on my channel in 2022. A lot of people who would come into content and be like, Jack, you're crazy. you're drinking the Kool-Aid if you think the Fed is ever going to taper, or if you think the Fed is ever going to tighten. They're never going to tighten. Well, they tightened. I don't hear from those guys so much anymore. I don't know what happened to them. They around here? I don't know. Maybe they're on your side. I don't know. They disappeared because look, boom, Fed balance sheet going down. It's not going down as fast as they've been advertising, but it's going down. It peaked just under 9 trillion, currently at about 8.5. So the Fed has so far unwound somewhere around 450 to 500 billion dollars worth of assets. And when they unwind those assets, they destroy the dollars for their redemption. So again, the supply of dollars is shrinking right now. All right? So what happens to price? What happens to value when the supply shrinks and demand stays the same? The price goes up, the value goes up. So the shrinking money supply is something that's going to put upward pressure on the DXY, on the DXY, on the value of the dollar. It's going to want to send this chart higher. When dollars become scarce, the value of the dollar moves up. So if this trend of quantitative tightening continues, if the banks continue to play defense, and if you saw the earnings today, the banks are playing defense. They're writing fewer loans, which means they're creating less money, and they're setting aside for credit loss provisions. And when people default on loans, money is also destroyed. When people pay back loans, money is destroyed. So money's getting destroyed right now. Dollars are getting more scarce. That's going to put upward pressure on the dollar. What I'm getting at here, folks, is at some point, this DXY trend is going to reverse. I can't tell you when, how soon, how long. This could go on for a little while. But the dollar is getting more scarce, and prices don't continue to go down forever when the scarcity of things is increasing. So that's an important thing to keep an eye on here. All right. What else we're looking at? Now, here's one thing that could increase the supply of dollars. You guys remember this one? Reverse repos. There's still $2.1 trillion sitting on Mars in the reverse repos. Now, these are dollars that aren't circulating right now. They're not being exchanged. They're sitting in no man's land at the Fed. So if the Fed were to stop paying the interest on the overnight reverse repos, or if they were to lower the rate, or if they were to raise the rate, the Fed funds rate, and not raise the reverse repo rate, these dollars would start flowing back into circulation. So this is something that could increase the supply of dollars and thus send the DXY significantly lower. It's one thing to watch out for. You've still got that $2.1 trillion sitting at the Fed. And what else we have? We already talked about that one.
Mike just put up a super chat.
All right, let's see what Mike has got going on here. Hey, Mike. Thank you, Mike, for the super chat, for the support of the channel, sir. You are a gentleman and a scholar. Mike Bender from Robin RC Models says the SPX broke 4,000. S&P, let's take a look. Broke 4,000. Oh, boy. Boy, howdy, did it ever. Look at that green candle. Someone, oh, man, broke 4,000, and it triggered something in the algos because here comes the buy-in. Yep. Good catch, Mike. It just broke 4,000. Man, that was fast. You got that like to the minute. Let's see, what's the Dow doing? The Dow is also legging up right now, up 134, and the NASDAQ is up 76. So someone out there is buying stocks in the close.
You know, I think we were talking about how everybody's just buying right now. Bitcoin, we think they're covering puts, so people are buying to cover the puts. Money's flowing in to assets right now.
Yep.
So,
I mean, that's your first indicator right there. Is this move for real? Bitcoin is going up, really? With everything that's going on in Bitcoin. By the way, you really think this is for real? Take a look at the RSI on Bitcoin. What do we get? 84 and a half is the RSI on Bitcoin. Yeah, here's the 50-day. No, is that the 200-day? That's the 200-day moving average it's butting up against. It ain't going any higher than that. Nope. RSI at 84, hitting the 200-day moving average. It might stall or it might contract. It's not going to go much higher in the short term. Look how far back you have to go to find the last time the RSI on Bitcoin was this high. The last time the RSI in Bitcoin was anywhere in this ballpark the price of Bitcoin was about $67,000. And what did the Bitcoin price do in the aftermath of that? Yeah, not so much. So, no, I am not piling into Bitcoin. You guys know my Bitcoin strategy. I dollar cost average into Bitcoin. It's automated. I don't look at the price before I buy or sell. I never sell Bitcoin. I just buy a little bit at a time. I use Swan to do that. I trust Swan. I don't leave my coin on the exchange. Link down below if you want to check that out. I pull my Bitcoin off the exchange and put it in the cold storage. That is part of a 10-year strategy. I am going to buy through the next 2 halving cycles and see where we come out on top of that. If I had started doing that a few years ago, I'd be sitting pretty right now. So it's been painful. It's been hard to stick with that strategy through these last few months. But if you only buy when everybody else is buying, that's not how you make money, folks. Sorry. You got to buy before everybody else is buying.
Take a look at VIX. Take a look at the VIX.
I do not have the VIX chart up right now, so we are going to have to bring that one up. You guys are going to see how slow I am on TradingView now. Let's see. We are going to bring up the VIX. Where are you, VIX? CBOE Volatility Index. Oh, look at that breakdown in the VIX. Yep. 18.03. And, I showed you this one this morning on my live stream. That is the long-term monthly trend on the VIX that you're looking at going all the way back to 2018. We've been below it on the daily a couple of times, but this is the low of the month going all the way back to 2018. And the VIX right now just broke below that trend line at 18.03. Volatility is in short supply right now. So typically the VIX inversely correlated with the S&P 500. That is not a true correlation. It doesn't always work out that way. The math that goes into the VIX is very complex. It's based on options pricing. But generally speaking, big spikes in the VIX are usually accompanied by big dives in the indexes. So VIX is breaking out to the downside right now. And, I'm looking at the RSI and the VIX. It's got a ways to go. It could still head lower. Good call on that one, Mish. Thank you, sir. And by the way, if you guys were running
that was vacation time.
Vacation Time called that one out. Thank you, Vacation Time. Yep. I appreciate that. And once again, thank you, Mike Binder, for the super chat, sir, and for supporting the channel. I appreciate that very much. And well, there we go. So much for our 4,000. It looks like we're going to head right back below that. Now, a lot of people have been talking about that there was too much negativity in markets and that, it's, there's too many bears and that is, everybody's saying doom and gloom. Well, no, not really. Everybody's not saying doom and gloom right now. Because look right here. The fear greed index is sitting at 63. That's not a fear trade. That's a greed trade. Greed is driving the markets right now. And you want to see how much? Take a look at this timeline. This is the fear greed index going all the way back to a year ago. And we're actually more into greed territory, i.e. there is more optimism in markets right now than there's been really only other than a couple of occasions. So we're closer to a top than we are a bottom, according to the Fear Greed Index. All right.
Well, if we look at the Michigan sentiment survey that came out earlier, you don't have to pull it up, but it's the highest it's been in so long. I mean, it was a huge beat to the upside.
Yeah. Michigan consumer confidence, 64.6. And what was the expectation for 59? University of Michigan consumer sentiment for the U.S. rose to 64.6 in January of 2023 from 59.7 in December, the highest since April, beating market forecasts for 60.5. So, good news. Everybody's going shopping. Again, soft landing. Congratulations, Fed. You really nailed that one. I don't think so. That doesn't mean markets can't go higher for now, but I don't think we've heard the last of the soft landing. And, Michael Guy had said it pretty well this week in a tweet. He said, conditions favor a melt up right now, but there's a near certainty of a credit event in the next year. Or something, I'm paraphrasing. Maybe he didn't use the certainty language. A credit event is where you have that blowout in the debt market like Greg Manorino's been talking about, where interest rates just suddenly skyrocket out of nowhere because all of a sudden there's no dollars left and everybody wants the few that are in circulation and they start bidding up the price for the dollars. The price of dollars is interest rates. There's a strong likelihood that something like that happens in this calendar year, especially as the Fed continues to take away money, continues to quantitative tighten. But at the same time, look, you've got a lot of froth in the markets. Market's running on greed right now. You've got the dollars heading lower. DXY 102.19. So markets could keep going higher here. They could. They could go for a while, folks. And whoa, look at that one. Who was that? Didn't come up over here yet, but I see it. Dakota Prairie. Thank you, Dakota Prairie. He doesn't say anything. He's just being Dakota Prairie. Well, thank you, Dakota Prairie. I appreciate the super chat, sir. No questions, no nothing. Just being a swell guy. Thank you very much, Dakota. We're going to leave that one up for a little while. All right, let's talk about something else that's happening right now. I may not make any friends with this one, but it's got to be talked about. All right. BBBY, Bed Bath & Beyond. All right. This one, folks. Look, Bed Bath & Beyond, let me just say, I hate Ken Griffin. I don't like him. I don't like what Citadel does. I do think they front run our trades and payment for order flow is a scam. But that said, Bed Bath & Beyond is a dying business. It's not the victim of short sellers. Maybe there are synthetic shares floating around. In fact, I'm sure there are. All right. But Bed Bath & Beyond is a dying company. All right. We just got their release not too long ago, or they warned they have $200 million left, and they're burning cash at roughly $100 million a month. This company has 2 months to live. In 2 months, they're insolvent. Well, I mean, they're already, in 2 months, they're illiquid. They can't pay their bills. They default on their debts. They've got a mountain of debt. They've got lousy credit. Nobody will loan them money. Maybe they can sell some of their assets, spin off some of their other companies. I heard they're in talks to sell Bye Bye Baby right now or something like that. Maybe they can get enough cash for that to stay afloat for a little while, but this company in its current form will not exist in a few months. And I've been watching this for the last few days. The shorts piled in. I mean, the short interest was through the roof in this one because the company was about to go belly up. And so the apes piled in, and they created a short squeeze, and it worked. Look, Bed Bath & Beyond is up like 450% or something like that over the last 5 days. But the RSI was approaching 80. It was at 81 at one point. This one, it's not going to change anything, folks. Best case scenario for this company. Best case scenario, the apes continue to bid this thing up, and the company is able to dilute them and issue shares and raise enough cash to stay alive for a couple of more months. It's their best case scenario. Nobody shops at Bed Bath & Beyond anymore. The housing market is frozen solid. There are no homes trading. And if there's no homes changing hands, then there's nobody going to Bed Bath & Beyond because they just bought a bigger house with an extra bathroom and they need a new bath mat. There's nobody buying more appliances for their new, bigger kitchen, right? That Bed Bath & Beyond, they couldn't make money during the most monster bull run in the housing market in history. They're not going to start now when the housing market is frozen solid, about to collapse. So, hey, maybe some of you guys watching are in BBY, and maybe you guys made some money recently. Congratulations for that if you did. Just be careful, guys. That's all I'm going to tell you. I'm not going to tell you what to do. Just be careful. This company will not exist in its current form in a few months.
I think if today Radio Shack was going out like it did 4 or 5 years ago, that it would be a meme stock, right? They would have done the same thing. But that's basically what's happening to Bed Bath & Beyond. They're just one day not going to be able to pay rent, and they're done.
Yep. I could tell you that the meme traders right now, the apes, the Wall Street Bets crew, and to a certain extent, this channel is a spinoff of that, right? I got my start in Wall Street Silver, so I empathize with these guys. I was, I right there with you, and I love to see Citadel on the brink of bankruptcy. I still hope to see Moaz someday, but you have to have a coherent business. Bed Bath & Beyond, just nothing but gluttonous blob of inventory that sells so slow. Their business model is no good. It's not a good business. You have to have a good business. If you've got a good business that is being targeted by predatory short sellers who are selling more shares than existence, then by all means, squeeze those mothers as hard as you can. Take them for every penny they have. They deserve it. But if you've got a business that's going down because nobody spends any money there, then you're not accomplishing anything. You're just buying time at your own expense. You're buying time for a failing business at your own expense. This business will not be around 6 months from now. So again, I probably didn't make any friends with that segment. I'm not trying to ruffle any feathers. I'm no Citadel guy by any means. I think they're crooks. I think they sell stock that doesn't exist, and they have targeted and damaged perfectly good companies in the past. Bed Bath & Beyond isn't one of them. You got to start with a solid business model, guys. That's all. Anyways, thanks again, Dakota Prairie. I appreciate the super chat, sir, and the support of the channel. And why can't I? There he is. Oh, now I made a scrolly mess out of things. All right, we are at 351. We got 9 minutes of trading left right now. The S&P still in positive territory, just clinging to it. We gave up Mike Binder's 4,000 handle. We're at 39.97. Dow is still up 100, and the NASDAQ is still up 66. So things going all right. Now, there's something else we got to talk about here, and this is one of those things that could send the Dixie lower. You know, we've talked about a couple of forces on the dollar right now, right? The dollar's obviously got momentum to the downside, and it's sending gold higher. But we got to talk about what the Bank of Japan is doing right now. And the Bank of Japan is engaged in, well, the most suicidal, we'll say kamikaze monetary policy of yield curve control, where they print infinite yen in order to prop up their currency. In order to suppress the yield on their bonds. I mean, they're holding their interest rates artificially low. And unlike the Federal Reserve with their QE, they're not just targeting a certain amount of bond buying every month. They're saying we will buy as many bonds as it takes to keep interest rates below our threshold. And I think probably one of the reasons why the Dixie is in this downward spiral right now is I think a lot of Forex traders may be front running a change in the BOJ's policy. And I think that's one of the reasons why we're seeing the dollar go lower, sending everything else higher. And here we are right here. Yen surges on BOJ policy speculation. Dollar up from 7-month lows. The yen surged on Friday, adding to earlier gains on speculation that the Bank of Japan will revise its ultra-loose monetary policy, while the dollar edged up against most other major currencies, rising off of a 7-month low. The yen was up 1.24% against the greenback at 127.69. Now, earlier this year, the yen was at like 150 to the U.S. dollar. Now it's at about 127. So a lot of this drop in the DXY that's been sending stocks higher has seen a corresponding increase in the value of the yen. And I think the Bank of Japan may be one of the culprits in why this is all happening. Now, Mish, you had some pretty good numbers that we were talking about before we started about just how wacky this has gotten. Now, keep in mind, Japan, folks, third largest economy in the world. All right, so this is a big deal, this going on here. Now, what was it that the BOJ had done for the last few days?
Well, yeah, I think it's important to note that they spent 4.6 billion yesterday, which set a record, beating the day before. But they did one buy of $3 billion in bonds, and they've blown through 150 billion in 3 weeks.
Wow. $150 billion of QE in the last 3 weeks alone.
And that's just to defend the 10-year at the 0.5 peg, which it lost last night. And that's why they had to spend so much money, is to get it back in line.
That's amazing. Now, when the Fed was doing their QE back in 20, let's wind this one up here a little bit, right? All through here, through 2021, when the Fed was doing QE, what were they were buying something like $30 billion a month, or was it 30, 45? Maybe it was like 30 billion in U.S. Treasuries and 15 billion worth of mortgage-backed securities. So at the height, forget this huge cash dump right when the pandemic started, but throughout 2021, when the Fed was doing QE, they were doing about 45 billion a month. Now, keep in mind, the U.S. economy is much bigger than the Japanese economy. We were only doing 45 bill a month. You're saying 150 billion is what the BOJ did in just the last 3 weeks.
Yeah. In the last 2 days, they burned through half of their monthly allotment already.
Wow. So
When we say allotment, what they're planning on burning through.
So, long story short, what the Bank of Japan is doing is not sustainable. And the market is calling them out on it. The market is saying any day now, the BOJ is going to have to stop what they're doing. They cannot possibly continue to burn through $150 billion. Now, they're burning through yen, right? This is the dollar conversion, about $150 billion worth of QE in 3 weeks. It's not sustainable. And this is what they have to do to keep that bond yield where they want it, which means the market wants that yield to go higher. So the second they stop dumping this increasing amount of cash, and the longer they do this, the more they need to dump, they can't keep doing that. The bond yield wants to rise. And when they let that happen, when they inevitably abandon this god-awful monetary policy, what's going to happen? Yen is going to spike. The rates are going to rise on the Japanese bonds, and a lot of money is going to flow back into Japan. A lot of money that had been previously hiding in U.S. dollars. And that's one thing, that event is one thing that could be explaining this drop in the U.S. dollar. Here, let's do it on TradingView since Brian took the time to show me TradingView. Thanks again, Brian.
All right. While you work on that, I think it's important to note that there's been some rumors that they're going to abandon this policy next week because they can't afford it.
As soon as next week. Wow. Now, look, folks, if that happens, the DXY, it's going to 100 like that day. I mean, maybe not that very day, but that week for sure. Doesn't have that far to go. Excuse me. Doesn't have that far to go. And what's that going to do to gold? Might be one reason why we see gold rising as denominated in U.S. dollars. If we're in for a big drop in the DXY, we're going to see gold leg up. So that's one possible explanation for what we see happening within the U.S. dollar here. Now, that's a one and done. All right. That's not something that is going to be sustained over a long period of time. Once this happens, you're going to have a rush of money into Japan, and then you may have a couple of weeks, maybe even a couple of months of a flow of money into Japan over that time. But it's not something that's going to be permanent. So that's something that's going to take the dollar lower. But keep in mind, as the dollar is going lower, you've still got fewer dollars in circulation. You've still got a Fed that is tightening. You've still got banks that aren't making loans, aren't creating any new currency. So the supply of dollars is still heading lower. And you've got the likelihood of a deep, severe recession on the horizon. And when you have a recession, money gets destroyed. Debts are defaulted on. When debts are defaulted on, money is destroyed. And I've been saying for a while, watch these layoffs. Watch these wages, folks. Where's the chart here? I showed this one this morning. This is the chart of U.S. real wage gains, monthly snapshots. And look at this. For 21 consecutive months, Americans' real wages have declined. 21 months in a row, we've been getting poorer. That means our wages are rising slower than the rate of inflation, something that should surprise no one. But look how long it's gone on for. Worse than even 2008, 2009, worse than the GFC. Now, we had this big spike in wages going up. That was all stimmies. That's what that was. People weren't getting paid more at their jobs. That was the government putting money in your mailbox.
Yeah, but the area under both curves is taken up by the red curve.
Yes.
I don't know if that makes sense.
Yeah, we're coming out of this poorer than we went in. That is for sure, Mish. That's for sure. And if you look, I mean, these real wage gains, they're starting to come back towards zero, right? As we see deflation, but there's still a long way to go until we get to zero. So we have several more months of negative real wage gains ahead of us, folks. Several more. And, we'll see. A lot of people, it's the first month of the year. A lot of people are probably getting their year-end reviews at work, probably finding out what kind of raise they're getting this year. Let me know in the comments. Is your wage increase anywhere near the rate of inflation? Even the government number? Probably not. And that means recession. That means
Um,
people will not have money to spend.
I was
What were
going
you
to say
saying,
we
Mish?
got market close. We got market close, and Mr. Cormack has a super chat.
All right, let's get to Cormac first, and then we will get to the market. There's Cormac. Thank you, Cormac Kilroy, for the super chat, sir, for supporting the channel. He says, whole world economy is a Ponzi scheme starting out in Japan. All right, let's talk about that. Let's hash that one out. What is a Ponzi scheme? Correct me if I'm wrong, but a Ponzi scheme is a scam where you make promises to investors of returns in order to get them to send you money, but the returns that you're giving
Usually
them
a high
is really
rate.
what's that?
Usually a very high rate of return.
Yes, usually a very high rate of return. But the rate that you're giving them, the return that you're giving them is really just a portion of the proceeds of the next investor who gives you money. That's how a Ponzi scheme works. Ponzi schemes need an endless flow of new investors. As long as those new investors keep giving you money, you can keep taking some of their money and giving it to the previous investors as returns, and then you go off to the Caribbean and spend all the investors' money, right? As long as the new investors keep coming in, the whole thing works. And well, that's a pretty good way to describe Social Security. It's a pretty good way to describe a lot of the way things run these days. Maybe not full out. I mean, well, yeah, because what are our benevolent government overlords doing with all the money that we pay in our Social Security taxes? They're paying it forward to their everybody, this 4,050-page spending bill that just got passed that included earmarks and pork spending for all the favors that are owed to all the people who gave them campaign donations. That's where all that money's going. So, yeah. I mean, I'm not going to sit here and argue with you, Cormac. I don't have it in me. I'm not going to defend these guys. So, a lot of, maybe not a pure Ponzi scheme, but a lot of the way a lot of the world economy works, it does resemble a Ponzi scheme. It's a debt-based system. Keynesian economics, it requires constant, endless monetary expansion. As long as the numbers keep getting bigger, it works.
Do you know why fiat has value? Because
Why
we
does fiat
agree
have value?
to it. We agree for it to have value. That's the only value it has, is our permission of it to have value.
Now, is that value intrinsic, Mish?
That would not be intrinsic.
Boy, if you want to see some, it wasn't ugly. It was mostly civil. There was a lot of discussion in that video I did about the intrinsic value of the Peter Zion video that I did when he said Bitcoin had no intrinsic value. And I'll tell you, I noticed one common theme. Almost everybody who tried to explain to me what intrinsic value was, almost every single person, what they ultimately ended up with was mass. That because it's a physical thing that exists, that it's corporeal. Is that a word? Is that the right word? All the arguments they were saying, oh, gold has intrinsic value because it's real, I can hold it, and it has industrial uses. No, the industrial uses is not why gold has value. Sorry. If you would have said that about platinum, I might have agreed with you. Not gold. Gold's use as money predates its industrial uses by thousands of years. What were you going to say, Bish?
Intrinsic means that it has value without faith in the system.
Yes.
So if the system broke,
cold hard, not subject to anybody's opinion, needs, or wants.
I think salt is very important in a barter system. Just putting that out there.
Yep. Yeah, but somebody lives in the salt flats of Arizona or whatever, probably not going to pay you a lot for salt.
Nope.
Again, even water, like the most basic necessity water, right? Universal. Everybody needs it. Somebody in a desert will pay you a whole heck of a lot more than somebody who lives on the Great Lakes. Certainly than the people in California right now. They got plenty of water. So it is subjective. It's subject to market conditions, floating market prices. Everything, all value is subject to market conditions. I guess the point I'm getting at is, realistically, if you really boil it down and peel that onion enough, nothing has intrinsic value. Nada. And so the argument everybody was really making was that Bitcoin has no value because it has no mass, because it is not a physical item that can be held. That's really, if you peel that onion enough, you can get people to that point. Well, guess what? Your dollars. How many actual dollars are there in banknotes circulating in the world? All printed 1, 5, 10, 20, $100 bills. Throw the $2 bills in there, sure. And all the coins. What is it? Something
It's
like
under a
7 trillion?
trillion, isn't it?
How
Oh, it's
much?
under 10 trillion.
It's under
So
10
you're
trillion.
talking
Yep.
about actual like printed money?
Yeah.
Oh yeah, it's well under 10 trillion.
Well, then guess what? Most of the dollars in the world, because according to the M2 money supply, there's 21 trillion. That means half of the dollars in your checking account at least have no mass. They have no physical existence. And if you think I'm kidding, everybody go try to get them at the same time. See what happens. So really, your dollar, no different than Bitcoin. The only difference is nobody can arbitrarily create millions more Bitcoin. By the way, I got to eat some crow. I mistakenly 3 times in that video said 23 million Bitcoin when it's 21 million. How to destroy your own credibility in one easy step. Yeah, I made that mistake 3 times in that video. Otherwise, I thought it was a pretty good video. But
Hey Jack,
that's
it's
most of the
nowhere
people.
near. Oh, but I can't find you.
What was that?
It's nowhere near 7 trillion. It's like 2.
Like 2. And
Yeah.
that's the real risk of a bank run. And you know, that's when Peter Zion was sitting there and he had his nose up in the air. He said, "There's no intrinsic value." He always had to get that nose. You had to look right up his nostrils every time he said no intrinsic value. Every single time. It was very snooty, very snooty. If that man had any idea how the banking system works, he would be running to Bitcoin and gold so fast. So fast. The only reason the banking system works is because the powers that be have convinced us that they've got it. And somehow we believe them. Somehow. I mean, I'm forced into it. I have some of my money in the banking system because I have a mortgage that has to be paid. I got to pay electric bills. Maybe one day I'll do a video of me walking into the office of the electric company and skunk a bunch of silver on and try to pay my electric bill with it. Probably won't go over well. But, yeah, that's U.S. dollars. Most U.S. dollars, almost all of the U.S. dollars in existence have zero mass. The same mass as Bitcoin, folks. They exist only electronically. And J. Powell even said it. We create it digitally in a database. They don't even print them anymore. They don't even have the common courtesy to actually run an actual printing press anymore. They just create them digitally. Anyway, that was my very long segue on intrinsic value.
They would not need to print the trillion coin. They just do it.
Yeah, that's why they'll never mint the coin. The $1 trillion platinum coin. Oh, my God. Where's Paul Krugman? Nobel Prize winning economist Paul Krugman with his $1 trillion coin idea. Brilliant. Nobel Prizes ain't what they used to be. All right, guys, markets are closed. Let's take a look. The S&P ended up closing up 15 points, 0.38% for the day, considering the bank earnings and all of those credit loss provisions. And the bank's basically telling us, hey, a lot of people are about to stop paying their bills and we're setting money aside for it. That's a pretty good day, all things considered. So a lot of optimism here. Dow up 112, a third of a percent today, closing at 34,302. NASDAQ up 11,000. NASDAQ is up 78.71% at 11,079. Stocks ended up having all things considered, a great day for stocks because, look where we opened up down here. So really good day for stocks. And again, the reasoning why I think this is happening is because the U.S. dollar is getting weaker. And, with the prospect of a Japanese pivot, I mean, everybody's been saying pivot, talking about the Fed recently. Not enough people talking about the Japanese pivot. Considering that, DXY could be going a lot lower. A lot lower. All right. Now, again, all the forces within the U.S. economy, Fed tightening, the banks not making loans, the prospects of default in a recession, those will want to send the Dixie much higher. And if the Dixie goes higher, all these values that are going up right now are going to reverse, and they're all going to head lower. But right now, the Dixie is going to continue lower at least for the next couple of days, maybe even weeks. And we'll see what happens if Japan goes. I mean, Japan could take the Dixie a lot lower. But eventually, the Dixie is heading back up. When dollars get more scarce, there is going to be people will start bidding up the price of them. I want to send another shout to Mr. Mike Bender. Thank you, Mike. He says SPX will run another 10% from here. Collect margin. Short squeeze, is that what you're saying? Wow, another 10% in the S&P. Where does that take us? 4,400? We got to hash that one out. Let's look at a one-year chart. Mike says 10%. That takes us all the way up to about here.
His theory is that there's a lot of margin out there that needs to be cleared out. And I kind of agree, right? You see that big top. We haven't gone over the previous high yet.
Yep, not in the S&P. Wow, that would be way higher. I mean, we're talking back in April of last year high. 4,400, another 10%. All right, Mike. I don't think we get there, but I'm not going to bet against you, bud, because we're talking about right here is the level you're talking about. It's a pretty big move, but I tell you, we've also got right now you got a nice little uptrend in your favor there. We're in an up channel. Draw another one here. We're in something of an upward channel right now, so 4,400. If we stay in this channel until mid-March, we'll be there. I don't know. A lot could happen in 2.5 months. But that's Mike's. All right, Mike. Thank you for the super chat, sir. Thank you for the support, as always, and for the ideas you send me on Twitter. I appreciate it, brother. And Civil Guard K9 LLC. My God, I love that name. I know I've said that before. That is a great name. Fed will hammer 75 in February. This equities one clouds their mandate. 75 is a bit much. I don't think 75, but the second half of your comment, I am 100% aligned with. This run in equities, the Fed does not want to see it. The Fed does not want to see this bull run right now. And there's always the possibility they pull what they pulled in Jackson Hole. What was that, in August? When Powell just pretty much came out.
Middle August.
He just slapped around the market. He said, all this optimism, we haven't defeated inflation yet. We remain committed. There is no chance of a pivot coming anytime soon. And the market sold off on that. So we could see something like that from Powell in February. 75, I think I'm going to go out and say very, very slim, like less than a 5% chance of a 75 basis point hike. I think right now the market is leaning towards 25, but I wouldn't rule out a 50. If Powell sees this bull run and doesn't like it and wants to send a message, he can hike by 50, and that would freak markets out if he did that. I'd be very surprised to see 75. I think we'll see Mike's 4,400 before we see a 75. Or maybe we get to both. Maybe we go to 44, and Powell gets so mad that he gives us 75 anyway. Maybe both of them will happen at the same time, and I'll just have to have a second helping of Crow all at the same time. Well, thank you guys for your scenarios, and I guess I better develop a taste for Crow. I don't know, man. We'll see.
Well, I think the Fed still has, the Fed still has, by their own admission, about 100 basis points to go up, right? The question is, do they do another 50, 2025, or do they do 425s?
I'm leaning towards 3 more 25s right now. That gets us to what? Is there one in February, March, April, right?
That'll put us Fed meeting right about 5%.
Yep. And 5 seems to be like the consensus of the dot plot. We'll see where that goes. The dot plot is where all the Fed governors say where we should be at this point. So, yeah, I think, again, I'm going to say 75, probably not. Now, I'm going to shift gears a little bit because I had a whole bunch of charts set up for oil and for gas, and I wanted to talk about those, and I forgot about them earlier. We got to talk about energy because the energy trade is really setting up. Let's talk big picture before we get into the charts. All right, what do we have in energy? We've got 3 main stories that I see. On the bullish side for energy, we have got the SPR dumping is now behind us. There was a much smaller previously approved sale of the SPR that happens every year since 2016. That's still going to happen, but that's like 20 million barrels spread out across the whole year. That's not going to move markets, right? Not when we were doing 20 million a week not too long ago. But the SPR dumping is over. We dumped somewhere between 180 and 200 million barrels of oil on the open market between May and December. All right. So this whole drop in oil prices, this is all Strategic Petroleum Reserve. All right. Now, that's done. So that is a bullish factor for the oil markets. We've also got the reopening in China. That's going to be very bullish. The zero COVID policies were ludicrous, locking up 1.4 billion people. You just can't do that forever. People just won't live that way. Although watch the FEW backwards, watch them try. All right, so the Chinese reopening, that's going to have a lot of new demand for oil hit the market right as the SPR supply is going away. Those are the bullish factors for oil. The bearish factors for oil is the prospects of a recession. I would say the certainty of a recession, right? Or the recession that we've been in since the middle of last year that nobody wanted to admit to. All right, so that's the bull and the bear case. SPR dumping is over. China reopening, sending prices higher. Recession, destroying demand, sending prices lower. Which force do you think will be more powerful? Depends on the strength of the recession. I'm leaning towards higher oil prices. I've been leaning towards higher oil prices for a while now. I've been wrong for a while now. But the oil market is showing signs of possibly bottoming. Again, let's talk about the technicals now. Check out the RSI right now. I've got this line going all the way back to the highs in March, connecting all of these peaks in the relative strength index, or the basically the momentum of the move. And you'll notice here, just broke out of it. Can you guys see that there? Put a little arrow up there so you can see it. Right there. We just broke above that high in the relative strength index. So that means this move up over the last few days might have a little bit of momentum. By the way, thanks again, Brian, for showing me TradingView. By the way, we've also got a higher low in the RSI. You guys see that little line there? So we've made a higher low. That indicates a possible reversal. Look what we've got over here. Oh, oil just broke above the 50-day moving average for the first time since November. That's another bullish indicator. And one more thing I want to do is it looks like we have setting up here something like an inverse head and shoulders pattern. And an inverse head and shoulders is a bullish reversal pattern signaling the end of a downtrend. Now, a more experienced technical chartist might be able to put the neckline at a better level than I do, but we are very close to completing that inverse head and shoulders pattern, indicating a reversal of this, 7-month downtrend in oil prices. And look, the prospects of a severe, deep, nasty recession, they are just that. They are prospects right now. For the time being, the American consumer is still spending money like a drunken sailor, as much as I've tried to tell him to stop. Stop running up those credit cards. You must stop. Don't make me show that consumer credit chart again. It's almost $1 trillion. The interest rate on that is going up. It's not going to end well. But those are prospects of a severe, deep recession. They're just that, prospects. The SPR dumping is definitely over. The China reopening is definitely happening. So oil looks like it could be going a heck of a lot higher. Now that pattern hasn't completed yet. Go ahead, Mish.
Yeah, we saw some reports that China's future oil contract for next month increased by 20%. So, we're going to start seeing some pressure here.
20% increase in the second biggest economy in the world. That is not insignificant. That is significant. Very much so. That's a lot of new oil demand. Now, we do have demand destruction happening in the U.S. Some of the gasoline numbers, gas prices here in the States are very low. There was a ridiculously large inventory build in crude stockpiles this week. It's so big, it makes me say the numbers are BS, to be honest with you. It was way too big. But you do have demand destruction happening right now. But do you have 20 million barrels a month of demand destruction happening right now? Because that's how much SPR supply is no longer on the market. I don't think so. So I think oil is looking to set in a bottom, looking to have put in a bottom. Again, the neckline, you could draw this a little higher, you could draw it a little lower, but the big one I'm looking at here is retaking that 50-day moving average and this breakout in the RSI. That tells me oil is bottomed out. Now, I have no position currently in, oh, I'm sorry, I do. I own Devon Energy. I own shares of Devon Energy. That's the one oil stock I hold, but I have no other positions in any oil plays at the moment. I am looking to change that, however. And I see Mr. Jason Lucas. Thank you, Jason, for the super chat. He says, yay, TradingView. Just noticed you made the switch. Jason, yes, and you can thank Mr. Brian Zarb from thetechnicalchartist.com for that. Brian took time out of his schedule to walk me through and show me some things in TradingView. He gave me like a 2-hour tutorial, and I recorded a lot of it because I've already forgot 3/4 of what he showed me. Some of the stuff he showed me, I was just blown away by it. So I'm still very much a novice in TradingView. But yes, we've started to use TradingView. I'm forcing myself. I still use Yahoo Finance and investing for other things. I'm trying to make the transition slowly and just exercise it. But yeah, you're going to see a little bit of changes around here over the coming weeks and months. The first one you guys may have seen already, that I'm doing the 10-minute live streams every morning. All right. Thank you guys for the good feedback, the positive vibes on that one. I'm really enjoying the 10-minute live streams. It relieves so much pressure on me. I don't know if you guys know, but most days I'm so stressed out trying to get something on the channel, some update happened. And in December, it was really bad. I was getting so bummed out in December because the news cycle was so slow. I was having trouble getting any videos out. And, if I'm not getting videos out, I'm not working. I'm sitting here at the computer studying graphs and charts and reading articles all day long. And at the end of the day, I had nothing to show for it. It was terrible. So I'm starting every day, opening bell. Here's what's going on in the world. Here's the indexes. Here's the commodities. Here's the bonds, top story, and we're out. And I'm keeping them short. I'm keeping them under 10 minutes because I know a lot of people see the 1-hour handle on some of these longer live streams, and it makes you not want to click. I know some of you guys really like the longer live streams, which is why this Friday afternoon one, I'm never getting rid of this. I love doing the Friday afternoon stream. This is the best part of my week. All right, so I do this because I love to do these Friday afternoon ones. The Tuesday morning ones, I value your time. Let's put it that way. I don't want to fill the airways with fluff, so I want to get in, get out, start every day with some fresh content on the channel. Here's what's happening in the markets. And it makes my life a lot easier because it has de-stressed me so much to be able to do that. So thank you guys for all the positive feedback on the short live streams. I will keep doing those into next week. We're going to extend this little experiment by another week, which, by the way, while we're here, there will be no live stream on Monday next week because Martin Luther King, markets are closed. So I won't be doing the opening bell live stream on Monday, but I will on Tuesday again, starting at 9:30. And yes, Jason Lucas, I will be using TradingView more and more until I hopefully will be using only TradingView eventually. For now, I'm still getting used to it, so I'm not quite as nimble in TradingView as I am in some of the other platforms. But thank you very much, sir, for the super chat and the support of the channel. I appreciate that very much. And Cormac is back. Hello, Cormac. He says oil prices will rise 4 to 6 weeks after Lunar New Year, in my opinion. Herd immunity, etc.
Yeah, I totally forgot about Lunar New
into
Year.
What's that?
I totally forgot about Lunar New Year because
yes,
that is
Chinese
travel,
New Year.
and they're going to let them do it this year for the first time in 3 years.
Yep. So I don't want to get into commentary on the health situation because I'll get myself in trouble, and the censorship on this platform is just unfortunate. Which, by the way, another change that you may have noticed, I will be spending a lot more time on Twitter. I'm posting my videos to my Twitter feed also on top of my YouTube channel. So please follow me at JGNuke on Twitter. If you look in the About Me section on my channel page, you'll also see my Twitter handle there. Please follow me there because there are things I can say on Twitter that I can't say here. Sad state of affairs. All right? It's sad. I can tell you I can't criticize China on this platform. When I criticize China on this platform, the army of bots shows up and downvotes my stuff, and my channel goes into the deepest, darkest algo oblivion in the world. So, I mean, the censorship is very much real, folks, and that's why I appreciate all your likes, all your thumbs up, and all your subscriptions. It really does help me out a lot. But please, I'm hedging my social media bets. I'm also building out Twitter. I like what I see going on over at Twitter, and that's why I'm putting all of my shorter videos up on Twitter as well. And yeah, I do think oil prices, Cormac, will rise after the Chinese New Year, after things get back to normal in China a little bit. And like I said, I'm not going to comment. I'm not going to do any commentary on that last part because I'll probably get myself in trouble. Is what it is. But thank you very much, Cormac. I appreciate the support, sir. Also, thank you for your support on Patreon as well. Cormac is one of the supporters on the Patreon channel. Link down below should you feel so inclined. Thank you, guys. We get together every Wednesday and do a little Q&A on Patreon also. And I actually get to see and hear you guys on that platform instead of just in the tweets. And my man Jose is here. What's up, Jose? Jack, I miss you talking about SBF. Hashtag forehead veins. Hashtag forehead veins. All right, let's talk about SBF for a minute. I saw an article about him today. It was him. It really just cracks me up. He's saying all the people he used to be friends with, they don't talk to him anymore. Oh, poor Sam. Poor, awkward, socially weird. He's just so smart and people don't understand him, Sam, right? Like the puff pieces from the traditional financial press about this guy amaze me. They're writing articles about Sam Bankman-Fried. His friends won't talk to him anymore. Oh, he must be lonely. Good. He should be lonely. When you rob millions of people, you deserve to be alone because you are a human paraquat. Let me know the movie down below, by the way. Human paraquat. I know somebody watching will get that reference. Sam Bankman-Fried is the lowest of the low. He stole the life savings of millions of people. He ripped off millions of people he never met, destroyed their lives. And look, some people lost everything. And when you lose everything, things happen to families, things happen to kids, things happen to marriages. And he got rich off of it while he lived in his little polycule in the Bahamas. So do I feel sorry for Sam Bankman-Fried that nobody's talking to him now and all his friends won't talk to him anymore? No, I don't feel sorry for him. Good. They're going to love you in cell block D, Sam. You're going to have all the friends you never wanted just as soon as you go to prison. And have fun. Sam, you want my advice, by the way? I don't give financial advice on this channel, but Sam, I'm going to give you a little bit of life advice. Sam Bankman-Fried, life advice, all right? Here's my advice to you, Sam. On your first day in jail, find the biggest, meanest guy in the yard and beat him up. Good luck. That's my advice to Sam Bankman-Fried. Jose, how was that for the veins coming under the forehead? Did you spin me up enough? I mean, you're going to push my buttons and spin me up with a super chat. You might as well. Thank you very much, Jose, both for the Bucky's Corn Nuggets, which I will never forget, and for the super chat, sir, and the support of the channel. Appreciate it very much.
T2 got the Big Lebowski.
Someone got the Big Lebowski? Who was it?
Yep, it was T2BRFU.
I'm looking for you. Where are you, T2? Big Lebowski FTW. Well done, T2BR. T2 Burfu? T2 Burfu? T. Can I call you T? Nice job, T. Yes, it was the Big Lebowski. Good movie. By the way, my buddy Keeker, my college roommate, I still have your Big Lebowski DVD. I know he's not watching right now because he's not that into finance. But he's the nicest guy in the world, my college roommate. I still have his Big Lebowski DVD. I had it so long that DVD went out of style and he doesn't want it back anymore. And he's seen Big Lebowski so many times, he could just recite the whole thing anyway. But true story, I still have Keeker's Big Lebowski DVD in my collection. And I don't even watch DVDs anymore. But, Mike, you're never getting it back. It's mine now. I think that's written in the rule book. Once you've borrowed something for so long, it becomes yours. I don't know. Maybe that's the wrong attitude. Maybe I'm going to end up
I think a decade
next to Sam.
A decade of ownership is kind of there.
A decade? I think we're pushing a decade. I do think we're pushing a decade. Yeah. But yeah, anyway. Sam will become somebody's. Yeah, that's right,
Yeah,
Grandpa. Sam is going to be a bad man's girlfriend. Yes, he is. And couldn't have happened to a nicer guy. All right, we talked about oil. Let's talk about gas. Because as much as the setup for oil looks good, oh boy, the gas. And by the way, the artist formerly known as Princess Consuela, I don't know what she's going by. I think it's Lucy now. Said
it
something
is.
about
It's
that.
Lucy.
Yeah. My dad. Sorry. Dad, I got to put this one up. I just saw my dad's comment here. Keeker and Jack's room as organized as SBF's books. Yep. My dorm room, folks. Oh, my college dorm room. That was like a petri dish, dude. That was gross. That was gross. Good times. Me and Keeker, neither of us were known for our tidiness at the time. But thanks, Dad, for that, for telling everybody. I feel like we're learning a lot about me again today. All right. Let's look at natural gas here. This is natural gas futures, looking at daily candles going all the way back to April of last year. And good God, look how low we are. 347 natural gas futures trading at. Let's zoom out. The last time we were this low, last time we were at 347, June of 2021. What? Look, not way before the invasion, way before any of that. Natural gas right now priced to June of 2021. That is how low natural gas futures have gotten. That's how unseasonably warm it's been here in the States. Plus, you've got the Freeport LNG plant is still shut down. So there was some demand destruction there. But this, folks, this is the weather. That's what this is. This is the weather. All right. Now, trading on the weather, probably not a good idea for most people, right? The weatherman is notoriously wrong. So be careful trading on the weather and trying to predict the weather and all that good stuff. But let's just look at this chart for what it is, right? We still have, number one, no idea who blew up the Nord Stream 1 pipelines or the Nord Stream 2 pipelines. We have no idea who it was. It was probably us. So we still have basically a natural gas embargo in Europe. We still have crumbling infrastructure here in the States. You know, all of our coal plants are being shut down. We're still losing nuclear here in the States. I know we have a couple of nuclear plants in the Southeast that are coming online in the next few months, but the older ones are still being shut down faster than we're building the newer ones. So the need for natural gas is only increasing here in the States. It's only going up. And every installed megawatt of windmills and solar panels is really only 0.2 megawatts of windmills and solar panels and 0.8 megawatts of natural gas. Because when the wind isn't blowing and the sun isn't shining, you need natural gas to come online quickly to replace those things. So that's why the natural gas industry is always paying for ads promoting renewable energy, because they know renewable energy gives them a monopoly on the energy industry. So natural gas, to call it undervalued right now, it would be to put it mildly. This is so tragically undervalued. It's ridiculous. Now, it could go lower, folks, because I was looking at the forecast, at least for where I'm at in the Northeast U.S., and there is warm air over most of America for at least the next 2 weeks. All right, so this thing is going to keep going down as long as this forecast stays unseasonably warm. But look at the RSI here, Relative Strength Index. Look at now several times in a row where we've hit this bottom right around 30, struggling to break through that 30. Now the price continues to go down as the RSI has been putting in this base at 30. And I want to zoom out a little bit. The RSI can go below 30. Check out what happened here. Every time I try to go there, this thing appears. Look, back in October of 22, the RSI went as low as 25. All right, so we can get lower here. We went below 30 also in June of 2022 also. But look, both times the RSI went below where we're at right now. Look at the V bottom that it put in. Right there and right there. Here, let's draw some lines so you guys can see. Look at the V bottom natural gas put in here. Give me another one. I'm sorry, guys. Still learning to trade. There's a nice V. Let's draw another one. There's a nice V bottom. right? Both times we got hard bottoms were put in. And let's put some arrows. We got one right here. Hi there. It's a short little arrow. There's another one right here. Right? Natural gas is close to putting in another one of these V bottoms, folks. And, I went to look, like, maybe this is something about inventory. Like, I know over in Europe, there's a lot going on with the natural gas trade. I know the storage tanks are still full in Europe, and winter has not arrived in Europe. And thankfully, that's been that way in Europe, because otherwise it would have been just a catastrophe for the European people. But here in the States, we have plenty of gas storage capacity. So I went to the Energy Information Administration website to look at current natural gas inventory levels, and I came up with this chart. This is natural gas storage in underground storage areas, and the gray area is the 5-year minimum and the 5-year maximum. And then the gray line is the 5-year average. And right now, natural gas inventory in the States is right at the 5-year average. So inventory is not low, inventory is not high, inventory is just average inventory. Now we've got 2 more weeks at least of unseasonable warm. So this blue line here is probably going to keep going sideways for at least another 2 weeks. It might tick down just a little bit because we're still burning through gas, but not that fast. But one of these days, this is going to happen. One of these days, and it's probably going to be soon, the Euro model, the supercomputer that runs these long-range forecasts, is going to detect a chunk of Arctic air breaking off of the polar vortex and dipping down over the United States. And this natural gas chart is going to bounce like you wouldn't believe. I don't know when it's going to happen. It could happen a few weeks from now. It could happen tomorrow. But, folks, we are setting up for another one of these V bottoms here. That's what I see happening in natural gas. And, shout out to Johnny Bravo. The only reason I looked is because Bravo has been covering this on his channel lately. Now, it's hard to predict the weather. Most of the people who predict the weather for a living are wrong very often. So this could go lower before it goes higher. But look, we're so low. We're so low. We're lower than we've been since this whole mess in Europe started. This mess in Europe is not going away anytime soon. It's still getting worse. I mean, now we're sending tanks and Bradleys over there. What else are we going to give them next? By the way, do we get a say? I mean, last I checked, we aren't in this war. Could have fooled me. Could have fooled the Congressional Budget Office. But at some point, this gas trend is going to turn. It's going to turn hard. And a lot of the indicators are there that it could happen very soon. So I don't have any positions in natural gas, but I'm watching close. And if I see this RSI dip below 30, if I see it get down into the high 20s, I'm going to start one. I'm going to start nibbling. So somebody was asking, it was Lucy was asking about natural gas before we started. I wanted to make sure I covered that one. Gas is low because of the weather. The weather is not going to turn for at least 2 more weeks, but the inventory is not that high. And things have to stay the way they are for quite a while longer in order for the inventory to ever become a problem. Meanwhile, prices are just going, they're too low. The prices are just way too low. We still have an energy crisis going on in this world. Just because it didn't get cold yet doesn't mean we don't have an energy crisis. So that's what I got to say about natural gas and about oil, folks. And I think we're getting pretty close. Oh, Jeffro Bodine says, cue the fire. Sorry, I cannot plagiarize the great Jay Bravo, who is a very nice guy, by the way. I was lucky enough to meet Johnny Bravo in person over the summertime. Really swell guy. Really fun to hang out with. Me and Ninja and Chris went and took a ride on Bravo's boat. That was a good time. I'm very lucky to be doing this, man. I got a great job. I want to do this forever and ever and ever. All right, guys. It is now what time is it? It's late. We've been running long. It's 4:40. I think we're going to wrap it up there. I want to say thank you, everybody, for your kind words this week. Thank you guys for checking out the short live streams in the morning. Thank you for all the super chats. Thank you to my Patreon supporters for everything you guys do to the channel. Thanks, Mom and Dad, who are in the room next door, keeping quiet so they don't interrupt the stream. It's about that time. I need a beer. It's been a long week. It's been a busy week, but we got 2 pieces of content up every day this week. That is so rock and roll. I want you guys to have an awesome, awesome weekend. I say it every week. I'm going to say it again. Hard times are ahead, but they are not here yet. So make the most of these days. There will come a time when we look back on days like today and we'll wish we had it so good. So everybody, crack a cold one. Have an awesome weekend. And Mish, you got anything you want to throw in there?
Everybody stay safe, and remember, wherever you go, there you are.
Love that line. I love that line. All right, you melon heads. The weekend begins now. Until next time, live small and dream big.